Investing in companies can be risky. In this video, I'm going to teach you the 10 things I've learned from being around angel investors. Hi, my name is Miguel Sanchez. In my ever-growing quest to create financial freedom, I look to create multiple revenue streams for myself and others. I invite you to come along for the ride by hitting that like button, subscribing to the channel, and definitely pressing the bell to make sure you're notified whenever I have a new video. Hopefully, you can learn along with me how to be financially free. So what are the 10 things a good angel investor looks at before investing their hard-earned money in a project? The first thing angel investors look for is the team. They want to make sure that the team that they're investing in are going to be able to take on any challenge that may come along, because an early stage idea can change a lot. And if that team is built to solve problems and is great at working in their industry, you're going to be a much happier investor at the end of the day. The second thing is problem and vision. You want to make sure the team you're investing in really has a problem that you understand and you really like the vision they have for solving it. The third thing you want to make sure you understand is the value proposition. What is this company doing and for who? Better yet, they have tested this idea on customers and the customers are responding well to their value proposition. The fourth thing you want to look at is the product. Have they built a solution to the problem they are solving? Some angel investors like investing in ideas before they're even created, but good angel investors want to see the team has built something that proves the idea is possible. The fifth thing is market. How well does this team understand the market they are targeting? If you ever hear a team say, "We are targeting everybody," you need to turn around and run, because it's virtually impossible to target everyone at first. Not even Facebook did that. Facebook started out with college kids and then they expanded to the whole world. The sixth thing you're going to want to look at is the business model. How does this company expect to make money? Early on, most companies are not making any money, but they at least should understand how they will be making money, how soon, and be able to explain it to you. The seventh thing you need to look at is scale. How is this company planning on growing big enough to pay you your money back? Because if you feel like the ideas they have to scale the company are not good, it's going to be a very long time, if ever, you receive your return on investment. The eighth thing you need to look at is exit strategy. What is their exit plan? Do they understand where and when you will be getting your money back, and can they explain that to you? Because again, you're investing to make money, and if they can't understand when and where they plan on giving you your money back, then it might not be a great investment for you as an angel investor. The ninth thing you're going to want to look at is, what is the true investment? Because some investments are just money, some investments are time and money. So you want to make sure you fully understand what the commitment is you are giving this company. And the 10th thing is, how well do you know the industry of the idea that is being created? Because if you can be what is called in the industry smart money, meaning you can not only give money, but you can really help that company get to the point where they are large enough to give you a nice, substantial return on that investment, that makes the deal even sweeter for any angel investor. If while you're asking questions, you can make sure you understand these 10 concepts, you should have a much better opportunity at getting a great return on your angel investment.